It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
All right. I think we are live. We usually just let like a couple minutes, like 2 to 3 minutes for folks to like.
Are you in
just
the
chill and
strip
so
club,
on.
bro? Are you in the
No,
strip club,
dude.
bro?
What the fuck? I'm like at a
Background
hotel lobby.
looks like, bro. Sure, bro. Like,
Come
what
on,
kind of
come
hold
on,
up before
come
what?
on.
Like, I mean, I see pillows. That's about it, really. Shit.
shit.
This guy's gonna get us canceled.
I don't judge. I mean,
I like how you guys jam right away. I like how you guys jam right away. I'm like, dude, like some like other guests would like be very, very like uncomfortable, but that's good.
And the more uncomfortable, the more shit I say.
I know.
All right. Okay. How about this? Let's start talking about a quick intro.
Yeah, I guess for some of the listeners who are here, both on the pod and on YouTube and on live, today we're chatting with do I pronounce your name correctly? Is it Ayyan?
Ayyan.
That's
Sorry,
perfect.
that's perfect.
Guys, nailed
I'm
it.
sorry.
Nailed
That
it.
was very racist.
Look at this guy. Okay,
Dude,
we have.
you said it just like my mom. Okay, that's how she yells at me whenever I come over to visit.
Okay. We have Ayyan from OnRe. So yeah, let's start with the basics. Just like if you can tell our audience a bit more about your background and so on.
Yeah, 100%. First off, I want to appreciate you guys for taking the time to set this up. Really excited to dive in. Although I'm not dressed up as well as Lambro is, but I'll try my best to keep the energy going. Background on myself, got into the space back in around 2019. I actually started off on working on a platform that was focused on tokenization of real world assets, funny enough. But that was purely a platform play. So we were trying to help create distribution amongst middle markets and various boutique banks for distribution of tokenized offerings globally. And I helped them scale out from 0 to 1 million ARR. And at that time, I had like a disagreement with the founders in terms of the route that we needed to go. I wanted to go down the more crypto savvy RWA purebred route. They wanted to focus more so on like the traditional institutional route. And so at that point, I kind of left because of what was happening in 2020, which was DeFi summer. I became super obsessed with farming, super obsessed with seeing all the different things that was possible on DeFi in terms of smart contract interactions, and actually joined Yearn Finance as one of the first non-technical contributors. Currently completely doxing myself now, but at the time was really, really, I think the starry-eyed moment of what DeFi could be, right? This was the definition of internet money. And still to this day, I think that DeFi wouldn't exist had it not been for Yearn Finance. From there, joined a hedge fund called Visory Capital and helped them build out their research arm. They went from about, let's say, 10 million AUM to about 100 million AUM by the end of the cycle. And so after that, decided to actually consider going from a fund and continuing to work on funds or going back to the startup game, and decided to do the latter. And so I founded a startup called Gateway, which was focused on privacy infrastructure. Nowadays, everyone's apparently on the privacy hype train, but back then it was a lot more difficult to get around on those conversations. But long story short, that startup was actually acquired by Circle earlier this year. And so I was over at Circle helping lay down the foundation for ArcChain. Many of my previous team members from the startup Gateway are still at Circle, and wishing them best of luck with ArcChain and what they're doing there. And now, like my thought process was, okay, I think that stablecoins we have seen in terms of usage for capital formation, right? Recently, a lot of the IPOs that we've seen from crypto companies have utilized stablecoins for their IPO raises. We've seen obviously stablecoins as being part of the strategy for payments. That's why I think that some of these new L1s actually do make sense. And I think particularly what Stripe is doing makes sense because they own the end relationship with the consumers. But the question now is, what can stablecoins do beyond just those two verticals? And I think the real world asset vertical is truly interesting because of the fact that you're talking about changing like legacy financial rails in terms of capital raising, in terms of distribution of payments, dividends, etc. And so that's really what stimulated my interest in OnRe. So at a time when OnRe was actually starting up and relaunching this year, it was actually done through a process where Capital came in, basically took over majority ownership of the company, And I was brought in as a co-founder and a chief growth officer as part of the strategy to lead the on-chain sort of growth of what you guys see as OnYC, or the on-chain yield coin. And so we started that off like in July. Since then, we have about 34 million AUM across the DeFi ecosystem. We're integrated across platforms like Kamino, Loopscale, Exponent, Radex, and then of course on dexes like Orca and Radium. So that's a little bit about the journey towards where we are today.
Wait. So what type of assets do you guys issue? Sorry.
So the only asset that we currently issue is OnYC, which is the on-chain yield coin, which is a yield-bearing RWA. That's a representation of our fund's performance as a reinsurer. Currently, it's generating about 10.3% APY. And so I can go through the sort of structure of OnYC and how it works if you guys want me to.
So I think a lot of on-chain yield nerds are gonna have a fun time with today's conversation. Right? I think there's a lot that we can go deep about. I mean, bless you, bro. I was gonna say, yeah, I was gonna say, yeah. I think reinsurance was a very interesting market when I first saw it. I think it would be great if you can just give us like what that is, like why that's relevant, like why it's a big market, why you chose it, and like all of the good stuff, basically. Yeah.
Yeah, I mean, I think that there's the rest of the team are the actual experts on the reinsurance side. So I'm the crypto Degen, crypto native person.
I
Everyone
see.
else on the
Okay.
team is like 20 to 30 years plus of experience in reinsurance. So actually the background too for OnRe is that prior to this, the team was building out the names platform, which was serving as a place for brokers and reinsurance providers to be able to come on and syndicate deals. The problem is, I think everyone understands this now, is that marketplaces are very difficult to build up. You can talk about like a cold start problem when you're trying to solve one side of the network. Now imagine trying to solve two sides of the network. So the team basically decided that they wanted to bring everything in-house, which is why they got the licenses to be able to underwrite directly. They became their own reinsurance business. They received licensing from Bermuda to be able to actually handle stablecoins. There's very few players out there that are actually able to have this license to handle stablecoins for the purpose of underwriting reinsurance deals. And so I came in after that transition to come and lead the actual on-chain strategy. So I will give a quick summary of like the way that we do reinsurance. Our focus is primarily writing two types of verticals, which is property reinsurance as well as specialty. So property reinsurance is like your industry loss warrants against things like property damage from windstorms, earthquakes, etc. So different types of perils. And then specialty insurance are D&O, tech, etc. Like things like that. So we typically try to diversify within those two, let's say, verticals. And then on top of that, we try to diversify through location, types of organizations we're working with on the specialty side, things like that. And we typically don't try to write deals greater than 5 million in total value in terms of premium. So we typically write 1.5 to 2.5 million on our deals. Sometimes we scale those up if it's a high quality return, which typically comes through our channels of brokers that we're working with. So that's sort of the way that we've been building out. We currently have 2 new deals that we're expecting to close within the next couple of weeks. So that APY that you're currently seeing, we anticipate it to rise before the end of this month.
Sounds good. I mean, so, and then you have everything into one basket of the yield-bearing token, right? Sorry, I forgot what is it called again?
Yeah, OnYC.
Your like
OnRe.
audio is
So, question is that what's your users right now? Or what's your target? Like, let's say, maybe I can share about my view as a more on-chain degen is that okay, as first time when you give me a new token, is it this delta in stablecoin, is it in USD? Is it basically like USD with 10% coming in? Is it a retoken that's a primary? And secondly, do I trust it enough, or does it have enough capacity for me to use as a collateral to, let's say, perk trade, to yield farm, or am I just doing this whole points farming thing for reinsurance at the same time? Like, am I a guy that buys your reinsurance and want to do additional liquidity from it? Is that what was this is mainly designed for at the start, or is it as a guy that you're putting something on chain where on chain users never used to really have access to good quality yield bearing RWA, and that's why you're trying to bring it on chain?
Yeah, I think it's exactly what you just mentioned, right? So when I first came on and like led the charge for OnYC, a major focus for me was, okay, what are the types of RWAs that we have seen. Historically, I think the problem with RWAs is that they try to come with this promise of bringing an asset from the traditional world into the blockchain for the benefits of capital formation, for liquidity, etc. The problem is the exact same black box that they operate in the traditional world, they operate in within the world of DeFi, right? It's everyone gets so excited when they hear this new fund just tokenize their offerings, and then you want to go and interact with it. You still got to do KYC, you still got to go through AML, you still got to do all these different things. And so for us, that to me was like the biggest problem. The team that really motivated me in terms of how do you structure this properly was Syrup USDC, Maple Finance's offering. I think that was really the massive unlock in terms of truly making an asset, or let's say a industry that the general or the average Joe doesn't have access to. How do you give them access to that, which is institutional lending? And then B, how do you make that fully composable across DeFi, which they have done quite successfully. So OnRe is exactly that. The difference is we're not doing institutional lending. Instead, we're doing institutional reinsurance. So you as the investor, in terms of what you're looking at, you're essentially being able to participate in the returns of a global reinsurer, right? This is one of the most capital intensive businesses. So a comparison that I can give to you is that on $20 million worth of deals written, the premiums or revenues that we can generate from that are the same or the equal amount as a tokenized money market fund that has over $500 million of AUM. We can do that with $20 million of written premium. So that's, to me, the comparison. We're 40x or 50x more capital efficient. The other thing that I'd mention is in terms of the class of the investor you mentioned, right? I think for me, the real unlock here is that it should be for any DeFi user. And yes, you could go about it from a yield farming perspective, but the reality here is that I think you should think about it from the idea of it's a bear market or you're simply sitting on stable coins. What's the best way to put that capital to work? And the best way to put that capital to work is potentially purchasing an asset like ONYC, which has deep liquidity across DeFi markets, which has deep liquidity and markets across the borrow lend protocols like Kamino and Loopscale. You go and purchase an asset, deposit it, and maybe if you want to still borrow other stable coins, run looping strategies on top, you know that the underlying asset is resilient, it's delivering its yield, it's performing well, so it gives you confidence to run strategies like that on top. So I think in the ideal world, in terms of like when we hit like escape velocity, and I think for reinsurance is when you kind of get to the $50 million to $100 million mark, somewhere in that range, you should start seeing a lot more investor confidence. You're seeing a lot more returns. You're seeing higher distribution of diversification of deal types. And hopefully our integrations allow you to do more with your ONYC holdings.
Nice. Okay, going into the mechanics a little bit more, just because it's something that we need to be mindful if we're playing with DeFi, right? Are you a whitelisted only that can redeem, or do I exit through, like, let's say because surely there is a period, like let's say 7 days, 14 days, or I just can only redeem through swap, and then some whitelisted guy can arbit in some sense.
Yeah, so I think that's a really fair question. So in terms of, let's say, the minting side, today there are two ways for you to mint. There's an institutional flow, and institutional flow essentially is you minting it, but you also get the right towards redemptions. And then we have the permissionless global access flow, which is allowing any sort of user anywhere to be able to acquire ONYC at the same price, or basically at NAV, just like anyone else, or just like the KYC users. The difference here is on redemptions, right? So you mentioned that, hey, do I have to be whitelisted to redeem? Currently, yes, we were running quarterly redemptions. And so we just ended the redemption request period. No one came in for redemptions. A lot of people were very happy with the performance of the asset and the disclosures that we've provided since. And what we're plan on doing is actually in Q1 moving to more of a liquid redemption structure that will follow a queue-based system that we see commonly with like SUSDE, with Syrup, etc. And it'll follow a stress factor. And so the stress factor that we've created is based upon a formula dependent upon the premiums we have coming in, the inflows total to ONYC, plus the available liquidity, which basically we keep a percentage of our entire AUM unallocated intentionally for the purpose of being able to meet sufficient liquidity in the markets. And then third, today even, we have secondary market liquidity across DEXs. So when you go to Orca and you go to Radium, we have over $10 million worth of liquidity on both of those venues. And something that I've taken time to build out with our team and with another project is that we are currently running a sophisticated bot that's being able to ensure that price stays within NAV. So we have it so that way when price falls below a certain percentage, our bot will go ahead and start purchasing on YC on the markets and stabilize price. We then take that on YC that we have rebrought, remove it from our AUM, and then put it back into the offer contract so users can acquire it once again. So we're staying very honest, very modest with this. Currently, I think in the past few weeks, especially in October, right? The funny thing was, I came with this strategy because we wanted to make sure that we can keep NAV, like with the price close to NAV. And I think we launched it in like, ironically, the worst period because of how much liquidations it happened, but also during the best period because we were able to prove out the strategy, right? So we've purchased over like $3.5 million worth of NYC on the secondary markets in the past month or so. And that shows how much strength we have in our strategy and ensuring that users are getting like secure DeFi strategies.
Bro, I'm guessing you're begging for a bear market because your type of product will excel in bear market. You just want people to borrow money from BTC and just like dip that thing into your yield bearing asset, right?
Lambro, don't put words in my mouth, but if that did happen,
Oh my
it
god,
would
dude! I no go ahead, Amber.
So I think, all right. So what do you think is your biggest struggle growing this, or what's your? Because like for me, right, it's like finding the on chain hurdle rate is like how much I'm willing to take risks right now, and then right now in Pendo hurdle rate is like probably like what 15%. Like I can just do PT for 15%. Like you really have to vibe something or give me some speculation to go 10, right? I'm this is from a toxic yield farmer, like max extraction DeFi guy point of view.
Hey, listen, if you're looking for, guaranteed yield, you can also go get some PT on YC, no problem, man. Have
Oh, you guys are
Yeah.
we do have
okay. My bad. See, man's flexing like that.
like I said, I think our goal was always to make this like a super DeFi native asset, and I think yield trading actually is like one of the best ways for people to be able to essentially lock in yield or bet on our performance, right? Like if you genuinely believe in what OnRe is building and kind of view this as like the new form of asset management, which I genuinely do think will happen. I think that new form of asset management kind of looks like businesses like Maple, like OnRe, and like these other sort of projects that have a very strong sense of their vertical. They bring the offering on chain and allow other people to participate or share in the upside. In terms of, I would say like yield, my goal here is to deliver confidence to users, right? So I think the biggest problem that we've seen with RWAs is a lack of transparency, right? And this is the number one reason that everyone is always sketched out. There's certain projects out there that have raised like 200, 300, 400 million, and then go and look at like their utilization in the RWA side. They've allocated none of that capital. I'm not going to say any projects names, but that's what happens. They raise all this money on the promise of yield, on the promise of hype, and everyone buys in. And then you look at like the actual returns. So my question is, what happens? So our view here is like we want to make sure that we're actually utilizing that capital both from a reinsurance perspective and from a DeFi perspective. So it's always like a constant battle. So I think transparency is number one. And I think we've taken the steps to address that. One, we have a very basic transparency dashboard live today. We are going to start having attestations getting kicked out later this month. We've officially signed on, so I can say this with Apex Capital. They recently acquired Tokeny, which is a tokenization platform, very large capital investments group with auditors, etc. So they'll be doing our attestations for us later this month on a monthly basis. So it'll be attesting to our APY and to our NAV. And then at some point, I kind of want to start working with the new projects that we're seeing, whether it's like a Chainlink proof of reserves concept, or we're talking about Accountable, the new startup that just launched. We want to make sure that we can stream as much data real time on chain, so that way people can actually verify our data, our investments, etc., as they're participating in the market. So I think that's like the major unlock, and really it comes down to performance. Right now, we're delivering 10%, right? And if we can consistently do that and deliver yields even higher, I think that's what gives investors confidence at the end of the day.
How do like the transparency dashboard or as a like a on chain guy? How do I check how much are you loaning And are you actually loaning to reinsure?
Yeah, that's a great question. So as of right now, the transparency dashboard that we have live obviously is not being attested for. Like I mentioned to you, it's a V1. It's our sort of head of actuary. So basically, what we do with the regulators in Bermuda, where we're licensed out of, we submit a form that talks about like our net asset values, where all the assets are sitting, the types of deals that we've underwritten. So we're taking the exact information that we produce for auditors on a monthly basis, and we put that onto our transparency dashboard. That is going to be attested for by the Apex group or the auditors that we'll be signing with officially, so they can check and make sure that information is correct.
Do you see yourself your moat in how well you can get a reinsurance deal, or in the regulation side of things where, or I'm guessing you're speeding up to build trust so people trust the brand, because that's actually I'm guessing that's the three core pillars as a real world asset that focuses on DeFi as well, right?
Yeah, 100%. I think you've nailed like all three. So I think like if you're talking about our moat, the first thing is that the reinsurance industry as a whole is quite, let's say, slow. And so the idea of people embracing unique forms of capital formation, that's not going to happen over time. I like to say we are a first mover in that vertical. And so when people are talking about stable coins and utilizing an asset to be able to get as many global investors or global capital to participate in an offering, that is what OnYC or OnRe is doing today. In terms of our plans to grow, reinsurance is a very profitable industry. Like you guys can look at some of the largest players, they're generating significant returns, like often 15% or so year over year. So it's a highly competitive business. So for us, it's really just about getting as much capital in. We get a rating. So we have some plans put into place already to improve our distribution. So one, in the coming weeks, we're planning on finalizing and announcing a partnership with an MGA. Long story short, an MGA, just think of that as a distribution channel. They have the ability and the relationships with some of the top tier blue chip brokers in the reinsurance space. So we want to work with them to be able to improve the quality of deal flow and really start putting more and more of our capital to work consistently. And then early, sometime in H1 2026, we are going to be finalizing our relationship with what's called a fronting partner. And basically what that means is that you're getting access to a A-rated licensed reinsurance business that is fronting to brokers on your behalf. So right now the problem is something like stablecoins might not be perceived as a rate. We don't have a rating because we're dealing with stablecoins. We can have a relationship with this fronting partner where they are okay handling stablecoins, but they are going to the brokers and the reinsurance partners on our behalf and using their capital, which is like rated capital. So we're talking like treasuries, etc., and using that to help us gain leverage. So the whole entire idea of getting rated, and think of it like a Moody's rating, but in the world of reinsurance, it's AM Best. That helps you essentially take on leverage on your capital. So the higher rating you have, the more leverage you can take on your underwriting capital and get exposure to higher returns.
Okay, bro. Sorry, I'm really sorry. I have to dip to do something right now. But like before I go, Marco will take over. But I really want to ask two things. First thing is, do you play poker?
I don't play poker. I am.
Do you mind losing some money to us?
Would you say?
Do you mind losing some money to us? I'm trying to host a online poker chatting event, so I to maybe chat.
Let's do this. I can put it into our OnRe Discord, and I can let you take all the money from our.
Very
Discord.
good.
Okay. Second thing. How can I What's the speculative area right now? On RAM? Like, am I just here just for the real yield, or is there some juice on top that I should be hoping for?
Yeah, I mean, like, look, at the end of the day, our entire business or our goal for OnRe was to bring the entire business on chain, not just the yield returns. At some point, we will probably be launching out a token for OnRe itself. And the big thesis for us will be focused on buybacks. Because reinsurance is such a profitable business, we will take whatever revenues we generate, utilize that to buy back tokens on the markets. Because the reality is that we view that as our ownership in the company. So we want to be focused on being a token first business. And so, with that information, you do what you want. But
do you have a points program right now?
We do have a points program right now. And Lambro, if you're not in the top 100 users, shame on you. But
I'm broke, bro.
we,
I'm on chain broke. I'm off ramp. I'm a washed guy. I off rammed and
oh
I'm like
no.
touching
Lies.
grass, bro. I'm on chain broke right now. I think I have less than like, but yeah. But anyways,
Well,
He
Lambro,
almost docked himself. I've less than 10
I
minutes
would
in.
like to personally take the honor of onboarding you onto OnRe and walking you through our DeFi integrations and platform. So if you do have time, let's definitely sync up. I'm happy to show you what's going on. And then you can give the community your honest review. If you think it's crap, then that's good feedback for us. We ought to improve. If you think it's good, then that's even better feedback for us.
all right, bro. I really got a dip. This has been a pleasure. Let's rebook this. I'm really sorry about this. I fucked up in the
No, it's
scheduling
fine.
and I
No, you're
changed
good,
so
dude.
many times that I can't like. Yeah. All right.
No,
I'll
like
let
I'll sort
the
of
guy
like
in the strip
yeah,
club
I'll sort of like
to
take over
continue.
in a couple minutes. But yeah,
That's
thanks,
great.
dude. Yeah, dude,
Lost you
we're
again.
still live. We're still live, by the way. Yeah, like I want to steal around 10 to 15 more minutes of your time
Yeah,
because, like, typically we do around 35 to 40 minutes of the pod because folks these days have like very limited
I'm
attention
good. I'm
span.
booked
And
up.
like,
Let's do it.
yeah, you're like, but yeah, no. But I think Lambro has pretty much asked like the majority of like what a degen might be thinking. Like, I just want to take a step back a bit because I think you have like greatly explained. And again, like just to put forth my bias, I mean, like I'm a depositors and so on, but I think you've like explained all the mechanics, the liquidity on dexes and like all of that. I just want to take a step back a bit because I feel that after what's happening in the past couple of weeks, folks are sort of like, hey, how do I trust something when even a lot of the on-chain stuff turns out to be doing off-chain shenanigans, right? And there's also like an increasing amount of just like I'm not gonna name names because like I'm like friends with like some of them, but like there's like an increasing amount of like, okay, where's the yield coming from? It's from an off-chain fund, and the majority of these off-chain funds are either the one I know I'm like setting up a lot of like context here, but like the majority that I've seen is either a black box private credit backed fund, private credit backed stables, or some centralized exchange like market making fund, or just basis trade fund, right? Like there are only like pretty much three types, and I think they're all still extremely correlated to like crypto, basically. Like if Bitcoin dumps 30%, almost all of them would be under stress, right? So I think what's interesting about you guys is that it's a different asset class. So that's why like I would really want to like take a step, like a big step back, like just imagine this like a TikTok shorts. Like what is even what is even reinsurance?
Yeah. Reinsurance is highly uncorrelated to crypto. So what we're doing is it's no different than the insurance policies that you see. For example, you might be living in Florida and there's a lot of hurricanes that happen there. So you need an a policy to cover your home or your property. Those insurance companies that underwrite those large policies don't want to just simply put up their own capital all the time to be able to cover everyone, right? Because they're taking all the risk on their hands. So they go to these players called reinsurance companies. Think of that as no different than going to an investor to help you cover your fund. So the insurance companies will take up a percentage. They'll go to the larger reinsurance companies to be able to put up their balance sheet as well. The benefit of reinsurance in comparison to other types of credit plays is the capital or premiums that you get paid comes up front. So it's an upfront payment.
Yeah.
And then when claims are occurring, you take from those premiums first. So a lot of people get concerned, like, for example, on YC, your yield is at 10%. Do you guys get affected when claims come in? Technically, no. The reason there is one, we've already have a certain amount of the premiums reserved for claims. So the APY you see is already taking that into account in terms of the expected
Mm.
losses. Second, if we have more losses than the claims that we've anticipated, the rest of the premiums will get eaten up. In that case, that still doesn't touch your capital as an investor. Instead, that just probably will draw down on the APY first. Then after that, let's say, for example, in the scenario that claims are greater than your premiums, that is when your AUM, your capital as an LP would be utilized. But I would still also remind you that we have a liquidity layer that exists. So this is all the premiums that we've recognized and all the other capital that we've generated outside. And that would be where we would go first before touching LP capital as well.
How big is this market off chain right now?
This market is currently, I think, around $750 billion today. And then the expectation for that industry to grow over the next 5 years is to about 2.5 trillion. So the reality is AI can displace engineers,
Yeah.
fintech companies, etc. But you will always need insurance, and most likely as we continue to build out data centers and more infrastructure, insurance becomes more and more of a necessity for the world, and that's where this business of reinsurance becomes very profitable.
Usually, who are, I guess, like the bigger players, and like who are the folks that put forth this capital? Is it like the family offices? Is it the institutions and so on? Like what profile of investors are they?
Yeah, so the typical way that reinsurance companies work, it's on a private equity model. So this is why it's like so difficult when you're talking about trying to bring an industry like reinsurance into DeFi because what it's a complete flip of expectations. One, in terms of transparency, investors in DeFi want transparency yesterday, and then they want liquidity today. Whereas with private equity firms, or let's say the world of reinsurance, you're typically anchoring yourself to one investor, which is like a family office or a large
Yep.
PE asset manager, etc. So you're anchored by one capital provider. And then in terms of information, your time horizon is 10 years, right? You're looking at an evergreen green cash cow in terms of returns. So we're trying our best to be able to mold the two sides by providing more and more information to the DeFi community, while at the same time meeting the liquidity requirements that DeFi expects. So it's not going to happen overnight, right? So if people are expecting us like, hey, are you guys going to be able to redeem $100 million of capital at once? I'm
Yep.
not going to lie to you and say yes, right? The reality is it's going to take time for us to get there. But I think with the amount of, let's say, pieces that we have put into play, we're probably well positioned to be able to do so within the next few years.
What's interesting is that I do feel that folks are underestimating, I guess, how unsustainable the existing cost of capital in DeFi is, right? I mean, like a lot of it is, I mean, like as a fund ourselves, we are aware a lot of it is like propped up by incentives and like tokens
Yep.
and like loopings, but like once the borrow rate sort of like flips on you, it's like it becomes sort of like this question that yeah, I mean, like what's like in reality, like folks say, oh, their returns are like 22%, but maybe like only Ethereum Aave leverage is the only one that can still give you like in the mid high teens at size. The majority of those other ones, if you put like 100 mil, it's you're gonna get squeezed. So
Yep.
yeah, I think it's interesting. Um, I guess yeah. What has been like okay, perhaps this is like even further back, but like what is if you can snap your hand and tomorrow you can unlock two key features or like integrations or like whatever it is, like what what is next that you want to achieve?
Is this from a DeFi perspective or as like a whole, like as a company?
Uh, let's make it one as a company, one as a DeFi perspective. Yeah.
Okay, cool. So from a company perspective, I think the major unlock is really getting that rating, right? So if we're talking about
Mm,
the AM Best rating, right
I
now
see.
as a company, if we got rated and we had like certain, let's say an A minus rating, you can go out and take leverage on your capital. So now, you and I talked about
Wow.
this before, the historical reinsurance returns that we've seen can sometimes be 40 to 50%. How do you get there? That comes to being able to take leverage on your underwriting capital to be able to get better returns.
These are
Um,
just the rating agencies like the Moody's and so on, or is it like different?
yes, correct. So it's an AM Best
Okay.
is the
Yeah.
reinsurance like rating agency, and so what
Okay.
they will do is look at your balance sheet, the assets that you're holding, what are you underwriting with, your performance, etc., and utilize that as a way to determine your credit rating.
I see. I
Um,
see.
from a DeFi perspective, in terms of integrations that I'd like to see, to be honest, I think like the real unlock for RWAs is really looping. I think there's a bunch of different assets. I know a lot of people love Pendle, they love yield trading, but for me, I think looping is the one that makes the most sense because what that's doing there is essentially allowing you to gain additional compounding yield on top of the underlying asset, which is genuinely some of the best financial engineering or unlocks that we've seen with DeFi. So for me, I really enjoy that, and I think that one of the best markets for users to go to today is our markets on Loopscale and Kamino.
I
Loopscale, you
see.
can go and loop with USDC, and on Kamino, you can go and loop with USDG. So I think we've achieved that. So from a DeFi perspective, I think that's really we're in the right places. It's a matter of now scaling the business. And I think that comes from just being transparent and being able to consistently deliver returns.
Got it. Got it. Interesting. Okay. My last question is mostly, I guess, like around if you don't mind expanding a bit more on when you said that with like 20 million, you can get an equivalent of like 500 million. Is that because of the leverage unlock that you just mentioned? Is that like why the margin in the industry is much higher than like a normal money market?
Yeah, 100%.
I
That's it.
see.
And also too, like when we're talking about like the types of returns that we're looking at reinsurance wise, like some of the expectation for us is to we want to try to hit close to 16% APY by the end of this year, and that's happening because of the fact that we'll be working with blue chip brokers to get us access to higher quality deals, and I think that's very very important. And then yes, too, at some point we will turn on the leverage on our underwriting capabilities.
Got it. Got it. Okay, dude. I mean, I will leave you with two things. Like one, do you have any question for us? I guess it's like for me now.
Yeah, I mean, you as a user, right? What is something that you want to see from us? I ask this because I think that at the end of the day, if we're going to make a successful DeFi
Yeah.
project, we need to make this, useful for people like you.
I think you're on point that the broader unlock is ecosystem wide. It's not just on YC. And what I mean by that is like if there was a more thriving PT markets on Kamino, let's say on Solana, right? Like if and I'm on the side that I hope Jupe lending and other lending providers are becoming more aggressive, so that happens. I know it's not just you, right? Like if you can, I mean, like if you can snap your hand and make that happen, like of course that's like one really great thing. But I think you made a very good point that it's similar to how Maple is doing it. Like I think if you can do that at scale, and then like obviously I think it's less about people like us, but like for the retail, I think all of the verifiable data that you mentioned is really really good. So like accountable is also like a friend, so I'm also biased there. But yeah, like I think like a lot of these ZK verification is going to be very useful over time because like otherwise, I mean, there's a lot of again, not going to name names, but there's a lot of stable coin with like 30 mil in in like TVL backed by private credit that when you go to their dashboard, just basically like private credit fund one. Okay, but that doesn't tell me like which loans, what loans, and I think that's why there are pretty good demands for folks like USDAI. And again, also biased, I'm calling my other bags, but like it's because there's just one vertical. So you can see like the exact loans or like exactly
Yeah.
we're doing this to this company at this, right? But like if it's like wrapped on a fund again, on a fund structure, it's a bit tricky. So like I think yeah, it's those two things. Yeah.
Yeah, it's funny that you mentioned that. Like when we were creating our transparency dashboard, we were like, "What can we reveal?" And so I think we've done where enough where we can disclose like the types of deals that we're underwriting, the expected returns, how much risk we have online with those specific deals. So I'm hoping that in the next few weeks we have even more of that data coming through. And then the other thing that you mentioned, I think, is really important for us as a project is we want to make sure that we unlock as much utility as possible for users. And so I think that you'll be surprised. Hopefully, in the next few weeks, we start seeing PT tokens for OnYC being incorporated into the very platforms you mentioned. It's already live on Loopscale. So if you are interested in
Yeah.
looking at that, you can go there. But I think in Camino in the next few weeks, our goal is to start having those assets integrated there as well.
Fingers crossed. Fingers crossed. All right. I'm gonna end this with one question that we always ask every guest. What is it? What is one thing that you need to make it in crypto?
One thing that you need to make it in crypto. Are you asking from a builder perspective or from a investor
It's
perspective?
whatever you want. Yeah.
Uh, I'm going to talk to the builders because I think everyone always talks about the investor perspective. I think if you are a founder or someone starting a project, you need to be you need to convince yourself before you can convince other people. Like if you're not
Yeah.
sitting down and thinking about your industry, thinking about better ways to improve your product, putting yourself in the user's shoes to and understanding like what their journey looks like, then you probably aren't building a good project. And I think this is the reason why so many crypto teams raise insane amounts of capital, like more money than some of the businesses are generating significant levels of revenue. And then they have no users, they have no traction, and they die out in 4 or 5 years. But hey, you made a lot of money up front. And I don't think that that's the way that we should be building. I think that if crypto is here to actually remove traditional finance, we need to build sustainable businesses. We need to understand what our users' needs are, and we actually have to understand what is it that we're unlocking. Crypto is not the end game. The end game is making sure that this is a product that's accessible to millions of people who don't say the word crypto. They just say, hey, this is a new way for you to invest.
Dude, I love it. I think I can unpack that a bit more, but I'll leave it here for today. Again, thanks for your time. I know it's a bit of a back and forth for us, but it's great to finally have you on the pod. And yeah, shout out, I guess, you guys can, listeners and pod on YouTube on live. You can check at OnRe Finance on X and all of that. Yeah, you can take a look at all of the, I guess, announcement that Ayyan just mentioned. That's going to be out in the next couple of weeks. But yeah, I think it's going to be interesting to see the Solana yield landscape grow.
I appreciate you having us on. Excited to grow together, and let's definitely stay in touch. If everyone has any questions, you can always reach out to me directly too.
Awesome. I will end the live. Cheers all. Thanks.
Bye.